What is going on, everybody, and welcome to another weekly update. What I like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So it's been kind of an eventful week, very informative, to say the least. But there's some really important things that kind of came out of this week, leading into a bigger week. I think you can definitely see that when I get down to essentially the expected moves for the week. You can see why I said that. There's could potentially be some bigger moves within the banks and in value plays going into this week. So we'll see about that. But before we get into that, let's recap what happened last week. There's some big things going on. Um, Powell's speech was on Friday. Well, essentially, let's take it back a step here. We have to understand that um, all week we've had Fed members talking throughout the week. This week will be no different. But leading up to, into Powell, you had a lot of discussion about the current sentiment, and things are looking bleak again. It's like they try to paint this rosy picture, and then and then some other data is leaking that's saying no, things are still really bad. So this is what I'm trying to say. Like you have to like push aside a lot of the different things that are trying to paint this picture that things are okay because they're not. There is still a lot of we haven't seen the worst of it, and this is again why I highlight Powell all the time and the Fed and what their actions are doing, because it's stating otherwise of what people are saying and what they are doing. And again, you have to understand that even the jobs report that makes it look like we have, positive GDP, which we could in the next GDP, we could probably actually have negative GDP officially. And so, with that being said, um, the jobs reports have been essentially refined, and they've been lowering a lot over this past year, right? And understand that it's getting worse. And understand that the Fed, as long as the Fed continue to raise rates, which everybody is hoping for, that in the next couple, in the next monetary policy or the one after that, that potentially we will not have another rate increase. We'll actually start pausing. But something I've always talked about is you're going to have a bigger catalyst for them to pause. And we've had some breaks and failures of banks, but apparently it's not enough. And so the Fed increased rates yet again. We have to understand that there is a 6 month delay on when you actually see interest rates and the impact it has. So just imagine if on last essentially rate increase that we had, Elon was saying if we go another 25-point basis move, that we're going to see a dark recession. And we did that again 6 months from last monetary policy. We haven't even come close to how bad it's going to get. I think we're just starting to see the cusp of how bad it's going to get. And so, anyway, let's take this back into Powell's speech. Powell's speech is on Friday. There's a lot of Powell, essentially the normal Powell that you typically get. They said an inflation rate is still 2% is what they're trying to do. We know that's just at 4.9. We will get another core before the next monetary policy, so that will help. Unclear if rates are sufficiently restrictive, which again, they're very heavily dependent on how quick that inflation is coming down. Again, we got to remember that July of this year, they were predicting it to be at 2%. We're still sitting at 4.9, and it's getting sticky. It hardly dropped over the last core, and so that is what the problem is. Failure to lower inflation prolongs pain. This is coming from Powell. Will take time to lower inflation. So we've talked about this before. At some point, inflation is going to get sticky. And that was the big issue and concern, that yes, it started dropping at a dramatic rate. Again, we increased rates at a historically fast pace. We were just doing 75 basis points back to back to back to back, and it was just gauntlet of 75-point basis moves. And we are just starting to see a major impact of that, as tech being one of the biggest um, uh, industries that had a lot of fluff that needed to essentially be removed. We've seen huge hits in tech already. Now it's the next stage to where you're going to see more layoffs in some of these smaller small business and stuff. So with that being said, that's pretty much what he had said on Friday. And so, even with that, all that being said, we did have debt ceiling. Debt ceiling obviously was a big talk this week. There was what was upsetting with me with the debt ceiling stuff is it has to get done, right? There's a very small chance that it won't actually get done, but ultimately, it's going to be they're playing the story essentially. You had Biden and Harris promoted all beginning of the week. The market was pumping off of it. And then come on Friday, you had them walking out and saying there was no deal. And there's supposed to be a deal by Sunday. We'll see what happens come Sunday, if there is or not. But more than likely, there will not be. We still have another week and a half. We have till the 1st of June, quote unquote, if we run out of money. I don't know how true that is. There was projections that we had money good till August, but we're not really certain if that's the case or not. Nonetheless, we could still run the risk of getting our credit score depleted, right? And so that's one of the biggest concerns we have, especially going in, especially if we can't come to a deal. I think we will come to a deal. The big thing is with the debt ceiling is that a lot of people are thinking that that could be potentially a bullish catalyst to the market, as it could essentially provide some new quantitative easing is how a lot of people are interpreting that. And so, but the problem is you have to still pay attention to the Fed. The Fed haven't stopped raising rates. We still have not got out of stage one, right? And so that is the concern, is at some point this thing is going to hit like a ton of bricks. And once all these rate increases finally catch up, right, that hit is going to be nasty, and that's the concern. And a lot of people are thinking that hit will never come. Maybe it will come way down the road. I do believe there will be I don't think, even if we did have a quote unquote crash or whatever the case is, or another big downfall, I think we will recover quickly, right? Like, I think there's things that are happening as of right now, but the problem is, again, the Fed aren't going to cut rates until something breaks, and it's going to be bad. It's going to be catastrophic. That's what I'm saying. It's going to have to be catastrophic, and you have to look at the events that have caused quantitative easing have been catastrophic. And this is, if you look back, we had bank failures, and they obviously were not big enough because the Fed continued essentially to increase rates. And so that's what I keep highlighting, and you need to pay attention to, because a lot of people are like, no, it's going to be bullish. It's going to be bullish. Again, we haven't broken range. You look at the technicals, we haven't broken up. We tried hard this week. That's not saying if we do have a deal by Monday, maybe we break up, right? We have to see how that plays out. So the debt ceiling is still very big. We'll see what happens there. It's going to be highlighted this week as well, so you have to keep in mind of that. The banking crisis has gone eerily quiet since we are more paying attention to the debt ceiling. That again is a huge problem, and so we will look to see. I'm sure we'll start hearing about banking crisis again once the debt ceiling stuff gets finished. And again, the problem is that I really don't want to know what's actually happening with the banks, because it's probably extremely nasty, considering that we just lost some of the biggest banks, right? Just what was it? Just SVB, just the amount of money we lost in that one was bigger than all the banks combined back in 2008. So that should be scary nonetheless. But Yellen did say this week, there was some news. Yellen just started kind of dropping the ball. I think it was Thursday or Friday. I think it was Friday. Yellen essentially telling bank CEOs more mergers may be necessary, essentially saying there's going to be more failures. That is her, however she wants to try to hide what is actually going on. But there's going to be more bank crisis. The bank crisis isn't gone away, right? And this is what I keep trying to emphasize. And yes, inflation is getting better, but it's not 2%. That is the goal of the Fed. You have to pay attention. This is why Powell has such weight to his words, because of that, because of the fact that they are in charge of the rates, increasing rates, right? They can regulate what is happening with the dollar, with inflation, and all those things. And so, being said, again, you can't fight inflation, and on the same token, there's something I stated back when this whole thing started: is you can't have fight inflation and also save unemployment or employment, right? It's like a seesaw. Either you focus on one or the other, and right now he's been heavily focused on one, and so it's like you're pulling this one part of the seesaw down so much that eventually the other side is going to snap and it's going to go flying back into the actual numbers in which you need to be paying attention to, right? And so that's my concern, is that is what's going to happen. However long that takes, I don't know. I think again Q3 is going to be the worst of what's going on. But again, it really depends on the Fed. Like, the Fed continue to increase rates all the way into Q3, that is going to make it really, really bad. I think if they just held it at where it was, if they pause now, I think Q3 is going to be really bad. But if they continue to increase rates June and July, right, then I think Q3 is just going to be extremely nasty. And again, you're waiting for that back half. You're waiting for that delay to finally come through months later. And when it hits, it's going to be like, oh, do we really even need to pause? We maybe pause for a very brief point. And then again, it would hit like a ton of bricks. And then you would start getting emergency rate cuts. Because it would be so bad, because you get so many failures. Again, you realize that a bunch of banks are failing at one time. That's going to lead to a cascading effect where a bunch of businesses will have to start cutting and laying off and going under. And so that's the kind of effect we're looking for on top of it. So with all that said, we will see, right? If they can set it up in the correct fashion, if Powell can set it up in the correct fashion, they could save a lot of banks and save a lot of jobs. But again, the demand has to come down. The demand and prices are just way too high. Powell obviously doesn't care about pricing and all that stuff. His focus is on inflation, and as long as that remains above 2, he's going to continue to hammer rates. And so again, just be mindful. He's not going to stop and then restart raising rates again, right? Because that's just going to cause a crash in itself. So we'll see what happens moving forward. But again, I think he's way overshot it. But we have to still see what happens. So that was last week. Again, we're kind of really low on news, and so that news alone from the debt ceiling stuff pumped the market up dramatically. And then obviously you've seen a lot of bad news start coming to the back half of the weekend, sold it right off. Hit that 4,200 and sold off heavily. So this week, what we got the FOMC meeting notes are going to be huge, in my opinion, because even Powell has highlighted this over the last monetary policy. He was talking about a recession, right? And that was the biggest concern going into that last monetary policy. Is he going to address recession? Are we in a recession? And again, Elon Musk said we are in a mild recession already, and we will continue to be if they raise another 25-point basis move, which they did. And then he said he wouldn't give his opinion about it, but he said in those notes they are going to highlight opinions. And so you're probably going to hear a lot of mild recession talk, and that is a concern. And that's why I want to see what's in these notes. And that comes out. That's just the report at 2 p.m. Eastern Standard Time. Again, there's no Powell after the fact. So that is really important. Then we got PCE data coming out on Friday, consumer confidence report, right? So that we want to make sure that we want to see what that is as well, because that's been diminishing as well. You have to also understand delinquencies are going through the roof. They're increasing even more and more. And it's like, it's like what pieces do you avoid and what pieces do you actually pay attention to? And the fact that credit cards are still getting maxed out and delinquencies are still there. Like, the spending hasn't stopped, but it is you're just now starting to see some of the spending slow down, right? Because you're getting credit crunch and all these other things. And we haven't even talked about in August, right? Like, there's a lot of the debt that's being held now. People that don't have have been essentially haven't been paying student loans either, right? Like, that's a huge thing coming up too. And so there are going to be additional bills. That's what I'm saying. Like, Q3 could be like extremely bad on how the whole thing buckles and unfolds. And I'm talking about the other side of the seesaw snapping and breaking, because you're putting so much stress on that one side and holding down the other side of the seesaw. And then eventually it's just going to snap the seesaw, right? And so that's kind of what I'm talking about there. But so we'll see there. And then again, next monetary policy is until June 14th. Core inflation is June 13th. And then watch list, again, the numbers here, SPX is on average. Tesla has been on average because it's been moving pretty big lately. But there's some bigger upticks here in BA, and BA's up another point, and JPM's up another point. Yeah, and the big thing you have to understand with JPM and Boeing, if they move up one, that's a big move for them, because again, they don't typically move. Their average really doesn't move that much, and so and then they're starting to price that in, that means they're kind of expecting something big to happen, but they're not really sure. And this is why I put these up here, because it's weeks like this where like they're kind of anticipating something could big happen this week, but not really sure, and then it does, and they don't capture that, and then those are the times to take advantage of options, because then these huge moves, you can get these huge moves in these option contracts, because essentially they didn't price it in. And then it would be something like, say that something big event happened this week and we moved like 150 points on the SPX, right? And then next week they would price that in. So you would see SPX would be 63 this week, and then next week it would be 110, right? Like you'd see a 40-point difference that they're trying to price in because of what just happened. And so we are kind of getting at a stage to where like the next big event is going to cause huge volatility spike within the options, but you're seeing these bigger uptick moves because they're not really sure what could potentially happen from those notes. If you got the debt ceiling, which could, if you hear more about people walking out, big thing is on Sunday, if we don't actually have a deal and come into Monday, they're still negotiating. That could be a huge deal, cause the market to sell off. So just keep in mind of that. So that could be what they're anticipating. The meeting notes, again, recession, a huge recession number, anything to deal with recession is huge. Banking concerns, again, Yellen was really vocal on the back end of last week. Maybe this week is a vocal week for Yellen, and maybe we start seeing some more bank failures. Again, there's a lot of, too much negative that can actually crater markets. This is why I haven't switched over to the bullish side again. I am normally bullish. If you would have followed me, throughout the years, I'm extremely bullish on a lot of stuff. But over the past year and a half, I'm aware of the cycle that's currently going on, and you have to let it play out. You have to let normalization play out, and then you can pick up and start pushing back up. So nonetheless, that is what we have for here. Let's go ahead and pull up what we got for SPX. So SPX pushed up to 4,200, 4,210, and it got rejected. We'll see if this thing can still hold it or it starts pulling back down. My concern, if this thing really starts pulling back down close to the 4,100, again, that is not a good sign for the bulls. We are kind of in a ascending wedge here, so kind of watching to see how this does play out. Typically ascending wedges, it'll break to the downside and normally get a pretty big move. You essentially recover 75% of that move. So we'll see if that's the case or not, but that's kind of what we're looking like going into these next couple days here. So we'll see what happens. Again, we're leading into potentially, I think, a bigger move. And again, right now, I think it's a recession. Maybe not so much debt ceiling. I think debt ceiling stuff might pump the market for a couple days, but ultimately, I think what you're really concerned about, again, is recession concerns. And the Fed, again, pushing rates. Again, that is just causing more tension in the background, and we're just waiting for that, again, that seesaw to snap on that. So we'll see what happens there as far as that. Again, if we do break back down, we got to watch this 4,100 mark, really this 40.59. If we can break below that, then you could probably get a pretty deep dive, probably bounce off essentially this trend line here, roughly around the 4K mark. We have gotten some bounces there. There is some support roughly around there. Might get a little bounce or retest up to 40.53, then maybe back down to the 3,800. We'll really have to see. Like I said, again, it's just playing it as we go. So again, very quiet time of year, but we'll see how this does play out. Bitcoin, again, it's showing some weakness, but it is consolidating again. It could be headed back up. If you want this thing to break, it needs to break the 31K mark. Otherwise, it needs to hold the 24K mark. If it doesn't hold that, it could potentially be coming down to the 20 mark, maybe even lower. I think if we start seeing it back around that 20 mark again, I think you're just going to see a new low. Same with the general market. So really kind of watching that. Tesla showed a lot of strength here, but again, the break, gap fill, and started to push back. The 180 held so far. It's kind of the key battleground here. If it can break 180, we could potentially head back up to the 200. But if it gets rejected here, again, you're watching that 164 level. If it breaks that, again, I think you're still going to find yourself around 140. And again, if we do start getting really bad news about recession, we start pricing that in. Again, who knows how long that could take? It may only take a month and a half to price in a recession, which means a lot of red days to do that. Could see us back below this 140, and if we get there, to see how well it holds around there. So maybe the bottom was 100 last year around that. I can't remember. I think it was around the October, November period. But nonetheless, around that time, could have been the bottom for tech. Again, tech got extremely oversold at that point. We'll see if that's still the case. Again, we don't know. And if inflation's still rampant, that's the bad thing, is like inflation is still really bad. So you don't really know. And by God, if inflation spikes back up for some reason, and you have to understand, and, I know some people really talk differently and see inflation differently, but ultimately, inflation is essentially having a massive amount of demand just flip from one essentially thing to the next, right? Like whether it's automobiles or whether it's housing or whether it's food or whether it's energy, right? Like you have these huge, massive demand spikes, which could be a big issue. And I think a big reason why we had a huge spike in energy as well is you had this huge conversion over to a lot of people buying electric vehicles as well. So you got a lot of people more charging as opposed to using gas. And so there's we'll see what happens there. But again, very interesting time that we're currently in. Palantir, another big one to watch. Massive rip towards the end of the week. Got rejected here. Let's see if it can hold. Needs to break roughly this hold above the 12 mark. If this thing continues to sell back off, still looking for this thing to refill this gap. You can see it here. Like it breaks the gap, it'll come back and refill the gap. How long is that going to take? It really just depends on the market. But kind of looking to see if this thing does backfill here. Again, this is a position I want to get into pretty heavily. So really kind of watching this. But it's got support here roughly at the 990. Essentially the $10 mark. So if it can hold that, could be good. Otherwise, depending on the market sentiment, could easily break that. And gap fill, again, I still roll the probabilities of the gap fill being retraced and filled is a lot higher than anything else. Not saying it can't go up, but like to happen. So we shall see. BA, as always, it is stuck between 220 and 195. If you don't know those numbers by now, just rocketing back and forth. Again, it's pricing in a little bit more this week, so we'll see what happens. Again, value has been very overextended. BA has, again, huge consolidation, just like the market. Like at some point, this thing is going to break, and I think it's going to break back down because, again, you've had this massive move here, these two massive moves. This has kind of been retraced, but we haven't retraced this at all, much like the market and the banks as well. Let's pull up JPM. Again, huge. We haven't retraced any of this. We attempted to try to retrace this, but got rejected. Again, JPM needs to break the 145. Otherwise, it needs to hold the 134. If it does break down, 123. And then looking for that gap fill roughly around the 110 mark. But we'll see what happens there. So that's pretty much what I got for the week. Again, there's a lot that could potentially happen. There's a lot of things that I just talked about are important, as any one of those things getting the headline news. And there's always tons of other things out there that could potentially crater the market that we aren't aware of. That's not discussed and keeps getting slid underneath the table, and then eventually it might happen. But with that being said, I'm not trying to, again, fear monger. That's not what I do. I'm just showing what I'm seeing and going off of that. and being in the market for so long, watching price action, the price action has been very strong to the upside, but it's still held. That 4,200 still been strong. If that does break, then you could potentially start talking about maybe a finish back to all-time high. But again, the market sentiment and what the Fed are doing, you have to be very careful about that situation, because what is, like I said, if you are watching that seesaw, the amount of tension on that one side, and then someone holding down the other side, the employment side of the spectrum, as opposed to the inflation side of it, the seesaw is going to eventually snap, and it's not going to be good, and then that employment side just going to come crushing down. So we will see how that does play out. But nonetheless, if you made it this far, go ahead and drop a like button. Until next time, I'll see you guys later.